There we go. So we can record this. What's up, guys? Hey, Jin's on. Oh, snaps. Hmm? Yeah. Oh, there's another person. Cool. Two minutes. Can you guys all hear me?
We can't unmute ourselves. Yes, we can.
And I do that on purpose. I know, I do that on purpose. Cool. A minute early. I'll just get started now. So I'm just going to go over the OddCAD trade that I sent out earlier yesterday. I'm just going to show you how I got to the conclusion that I got to and some of the analysis behind it. I'm not going to use Eric's strategy for this one. I'm actually going to use a different strategy. I'll apply Eric's strategy afterwards. But this one is pretty simple. It's just a longer trade than normal. If I show you, get some of this stuff out of the way. All right, so this is basically the time span from 2012 going all the way to recently. If you see here, this is the current price point. In the last several years, it's dipped as low as this point right here. So we're seeing in 2013 is where it hit that 91805 point. And then in 2015, it hit that 91805 point. Oh, sorry. Can you see it now? Wait, your screen sharing is some. Oh, I see what happened. All right, give me 1 sec. My bad. My bad, guys. Thank you. Sure. Okay, now you should be able to see it. My bad. Yeah? Okay, cool. So as I was saying, so right now here, can you see my mouse actually? Yeah. Okay. So yeah, so the price point is right here. Right now it's hovering at exactly 93.26. If you can see here in July of 2013, it hit the bottom at 91.80. And then here in 2015, it hit the bottom of 91.80. And then it's kind of hovered around this price point before. So this price point is coming to dip down. These yellow lines right here, this is the Fibonacci sequence. And I'm tracking it based on these bottom points. This is the lowest point ever. So if you noticed, every time it's hit a bottom low point, it spikes up. So in this case, this is a big pullback right here, but ultimately ended up jumping to a new all-time high. Well, I mean, this is an old all-time high, but like for its time. Okay, then the next time that it peaked, the same thing, it jumped back up all the way up. And then same here. So you're seeing these big movements. So that's 1100 pips right there from bottom to top. That's 970 pips from bottom to top. Even these smaller ones, that's 1,000 pips. So now this one is on track to either rebound off of the zero or rebound off of this support line, which it already actually broke through. So I'm guessing that it'll come down all the way and then rebound and shoot back up. So that's what I'm waiting on. And I'm guessing that it'll probably do this big of a movement between 800 and 1,000 pips. Now, if we look at the time span, this is between 7:31 to 4:21. So this is actually over the course of like almost a year. But just between this point is 3 months from 7 to 10. And that is 830 pips right there. So 800 pips over the course of 2 months may not be that much, but if you're doing 2 or 3 of this trade, so you dump twin or triples trade them, then you're looking at anywhere between 1,600 to 2,400, and that can make it more feasible, especially if you're using a higher lot size depending on your account. So that's this particular trade. Now, in terms of using Eric's strategy on this, if I were to add it on there, this is what Eric's strategy would look like. So you can see that the MACD is showing an oversold. The RSI is starting to work its way down. It's still not quite there yet. And then the parabolics have been dipping all the way down. So this moment, I would just wait for the parabolics to jump on the other side, which it'll probably go a little lower than that. Let me see if I can. Forget how to make it move farther. Yeah, it's probably going to move a little lower than this, and then it'll start to work its way up. But we just have to wait for these parabolics to jump on the other side. And it's pretty far. Even if you were to go to the 50-day moving average, that's like 300 pips right there. You see 280, 290, which it'll probably end up lower than that. But this is pretty much how I got this trade. I looked as far back as I could just to see what the lowest points ever were. And that's what I ended up getting on this one. Does anyone have any questions up to this point on this trade? Chat. Do you think the next time the daily SAR flips will be the big move? Or is it possible that it'll flip, then flip again for the retrace? It could flip a little longer because if you notice as it's flipping right here, it'll do little flips and then it'll go back. So it's doing all these little pullbacks as it goes down. So yeah, it could flip a couple more times before it hits the bottom. That's why I use the Fibonacci sequence, because the Fibonacci sequence will tell me what the lowest point ever is. That's what I'm shooting for. So if I go back, damn, I didn't want to mess it up. Okay. That's why I use this, because as you can see from its lowest point, it's still got a little bit of movement down. And Fibonacci is pretty accurate when in terms of market structure. So I think this will keep moving a little lower to hit this point, and we can even retrace off of this point to see. Retest off of this point to see if it's going to rebound or continue down. So Eric's strategy is working good for finding that point, but yeah, it's probably going to flip a little more before it gets to this point. I think this will be the lowest point, and then it'll bounce back up if it does bounce back up.
There was another question.
Huh?
There was another question.
Let's see. What does the pullback look like on the MACD? Let's see. All right. Let's do this. Let's do another one. So these little, are you looking at the little pullbacks or the big pullbacks from Sabrina? Because these little pullbacks, they just look like little waves. As you can see with each pullback right here, it dips up.
Oh, she says.
Okay, so both. So it just dips up right here. You can see as this goes up, that's what the pullback looks like. So you're not going to see a big jump to the other side. That's like this kind of jump would be when it jumps like this. I've noticed, I'll show you something with the MACD and the RSI. Whenever the MACD and the RSI cross like this, the breakaway from the buying volume happens right here, and then that's when your reversal happens. So if you notice, like there's your cross right there, and then there's your breakaway and the reversal. And then there's a cross right here, there's your breakaway and the reversal. The cross, and then it starts to kind of reverse right there, but that's just a pullback. It continues and then reverses. There's your cross and your breakaway and the reversal. So these little ones right here, you can see the RSI kind of zigzagging in the middle. It's in the neutral setting. These pullbacks are just really, really small. So you're not going to see like a very big pullback, but that's kind of what they look like in terms of like a large one and a small one. Let me see the RSI as your stop loss. No, I do something a little different than Eric does. In terms of the SARS being your stop loss, I try to do a 3-to-1 or a 2-to-1 or a 4-to-1 ratio, depending on how big of a trade I'm doing. This big of a trade, I'll probably do like a 3-to-1 ratio, where like if I'm shooting for 800 pips of a profit, then my stop loss will probably be like 250 or 300. Somewhere in that ballpark. That'll decide what type of a lot size I have, because if I'm using a 3% risk ratio and I'm using a 300 lot size, and that'll determine how much I'm willing to risk, how much I'm willing to risk and what type of lot size I choose. But that's my trading strategy versus Eric's. He uses the SAR. He just trades outside of the SARS, which is good too, because if you notice on this indication, for example, right here, as the chart starts to move downwards, the chart will cross the SAR, and then it'll either keep going or it'll reverse. So in this case, it kind of like rejected off that price and then came back down. And this was the SAR that started being created because of these green bars, and then it broke it. And once it broke that SAR, then it retraced down. That's why Eric puts his stop loss on the other side. If it happens to cross the SAR, then you know it's going to continue. Like in this case, where the green SAR started right here, and then this was the original SAR. Once it broke through, it continued up. Sabrina, yes, I am recording it. It's my first time doing a Zoom call, so I'll try to post it in the group. I'll cross that bridge when I get there, though. All right, so this is this trade. Does anybody have any other questions on this one before I move on to the other one that I saw today? Is your exit strategy based on FIBO? Why am I hearing stuff? Give me 1 second, I'll answer that. There we go. Okay, is your exit strategy based on FIBO or historic levels? In this case, it would be based on neither actually. I'm just going off of well, what do you mean by exit strategy? Are you talking about stop loss or take profit? How do you use money in a downturn market? How do you make money? Take profit. Your take profit. Okay, so in my sense, let me take a look at it that way. I'm just going off of how many pips it's done before. So on average, every time it jumps up, we're looking like right there. That's 872. This jump right here is 890. This jump is 972. This is the one I just did. No, that's 1012. So I mean, if you average out the big movements that it's done over the course before it retraces, you're looking at about 800 pips. So I'm going for a low ball of 800 pips. That's kind of where I'm getting my point at. If it bounces back, I can do a take profit at 23.6, any one of the Fibonacci levels. Before it you can see that it retested there off of the 23.6 and bounced up. It hasn't really retested too much on the 38.6. I mean, there was a retest there. Here it just completely broke through. It didn't even try. Right there was a big retest. Right there was a big retest. Some support in this range. I mean, it just depends on how the market's moving at the time. What do you mean by how do I make money in a downturn market? Galaxy A5. Like to analyze my trades, what indicators I use most? I mean, I use several different indicators depending on what I'm looking at. Like right now, this big trade, I'm just using the Fibonacci sequence. That's really the only thing that I need to look at. I was on Eric's strategy, I think here. So this is a little indicator heavy. As you can see, there's a Bollinger Bands to show the moving average and how far down it can go. There's the MACD and the RSI down here to show what the buying volume is and what resistance that volume is at. There's your 10 and 20-day moving averages just to see what that's doing, and then the parabolic SARs to show me the reversals all the way down. So I mean, if I wanted, I could ride these pullbacks all the way down, but I'm just waiting for the big jump. Yeah, whether it's bearish or bullish, you can use the same indicators. There's not a difference between the two. All right, so I'm going to move on to the second trade really quick, guys. This is pretty much the first one, OddCAD. The other one that I saw earlier today was CHFJPY. I was looking at the daily just to see where my trend was going, and then the entry was in the 4-hour. So this is solely based off of Eric's strategy. If you can see, both the RSI and the MACD are showing oversold. There's your cross right there that just happened. So I'd say, well, I mean, according to the SARs, you can enter now it's already showing the red and green SARs. So per Eric's strategy, it's good to jump in. You can take this down to the moving average, which is looking at 100 and what is it? Like 110 pips right there. This is going to be a reversal down. If I'm looking at the day trend, it's also showing an oversold right here. There's your cross. It kind of did a little bit of a pullback right here. The RSI is kind of trailing a little low, so I don't know if this is going to be just a small pullback and a jump, or if it's going to if it's actually going to do a full reversal. I'm guessing it might just be a little pullback. So I would say set your stop or your take profit around the 50-day moving average or a little higher above that. Remember, pullbacks, when you're trading pullbacks and you're trading against the higher trend, like in this case for the daily, it's going up and you're going to be doing a sell on the 4-hour, then your trade is going to be pretty small. Sometimes pullbacks don't necessarily actually go down. They more consolidate and then jump up. So there's always that risk that your pullback might not even be a pullback. It'll be a consolidation. In this case, it does look pretty good. All the indicators per Eric's strategy show that it's pretty good, and it's chilling right now at the what is this, a 10-day moving average? Yeah, the 10-day. So it could go down and then hit the 20 and rebound, or it could go down and hit the 50 and rebound. So either one of those two can be your take profits. Same thing with the stop loss. Your stop loss would be on the other side of the parabolics. So in this case, it'd be probably like right around 116, 100, 116, 150, somewhere in that ballpark. Any questions on this one? No problem, Jen. No problem, Courtney, anytime. I'm guessing no one has any questions because no one's commenting or saying anything. Cool. If you guys do have any questions, feel free. My inbox is always open. Jen's inbox is always open. You guys can try to reach out to Eric and see if he has free time, he'll respond. If you have any questions, you could post in the group. There's plenty of people in the group that know some stuff. They can also respond and just share information. I'm going to try to keep doing these every week and share like one trade or just go over some kind of analysis just to answer questions for anybody that can't make it out to our weekly meetings. We do host a weekly meeting in person for those of you that are in Arizona. Once a week we meet either at some restaurant or some location. We're still trying to solidify an exact location. Thanks. Thank you. I was thinking about doing these, but at the same time I wasn't. And then Jen was like, just do it. And I'm like, all right, fine. I'll just do it. But yeah, thanks. All right. I will see you guys next week. Have a good one.
And you recorded it, so you have your first training.